All right, what's up, everyone? It has been a while since I made my last video, and I think right now is one of the best times to make a video, especially to kind of round up the first 3 quarters of 2020. And I think a lot of people who have been chasing the whole DeFi DEX craze are truly out of the money at the moment. I do not believe that anyone is in the money, and at the same time, I think YCG literally just gave it a whole miss. We did take a little bit of pot shots here and there, did a little bit of hit and run, guerrilla tactic kind of trading. But all in all, we came out pretty alright for the year of 2020. Right now, we're just keeping it chill, sitting in either BTC or USD Tether, just making sure that things are going to be well managed, especially from a risk standpoint, going forward into 2021. Now, I think a lot of folks kind of got too crazy and was hoping that, after 3 years, after a good two-year bear market, they thought that, okay, with the whole DeFi DEX craze, but COVID came around. Markets were definitely very, very uncertain, very, very choppy, a lot of volatility in the equity markets. Bond markets are also literally also going all over the place. You're also looking at the fact that property markets are relatively stable for some reason, but at the end of the day, I think most of us know that there's going to be massive layoffs, especially in the industries that were hit hardest by COVID. It's a very interesting time, I must admit. So I kind of want to weigh in on my personal thoughts of how so far 2020 has played out, how it's kind of evolving, or at least moving on going forward. What are the key thoughts and strategies that I would like to adopt, or at least allow my members to kind of get a grasp, especially when they're building a portfolio with such a risky, high risk asset class such as crypto and crypto assets. Now, in terms of our take on staking, liquidity mining, yield mining, the reason why we haven't done that, I think just to clear the air, because we feel that as long as we are willing to trade, our returns are definitely always better than the mining rewards, the staking rewards. It's just a given. Now, can everybody do that? There are obviously folks who are very reluctant to do so because of the short-term capital gains tax that they might incur. And I think we all know that the long arm of the law is a very scary thing, especially looking at how there are a lot of folks that are going to be taxed, especially for their trading gains or their short-term trading gains. This is something that has always been the deterrent for a lot of people, and I don't blame anyone. That is why a lot of people are seeking the help of services who are doing asset management in crypto. But I must warn you that a lot of all these services are all based on reputation. Till this very day, after running my own personal portfolio and helping my clients, I do not manage their funds directly. I repeat, we do not manage anybody's funds directly. We educate them how to manage their funds. Now you must be thinking, wow, then obviously, why am I watching you? Why am I learning from you? I think the most important thing is that your coins will always have to sit and be managed by you personally. This is just my personal thoughts, right? Because if you really want to be in crypto, blockchain, you're into the whole DeFi, decentralized finance, decentralized exchanges, you really need to understand the realm. A lot of folks are always just so taken by predictions, right? So and so coin is going to go to $10 when it's at 10 cents. Why is there such a number? Like, who can actually validate and put a proper valuation to Bitcoin at the moment? Everyone's still trying to figure that one out, and that's the main cryptocurrency that everybody knows. The whole world knows what is Bitcoin. People till now accept Bitcoin for property, large transactions, small transactions, obviously maybe not small transactions, but at least people know Bitcoin. And my thoughts are, if you learn how to manage your own portfolio, you will be better equipped to stomach the risk. You will truly understand the time horizon. Hence, I have been reluctant and I have not done a single coin video, a coin specific video ever since in a very long time, because it makes no sense that I come out with the intention of, even if I had the intention of really letting you know how awesome this particular token is. And it, yes, from a technical standpoint, from a fundamental standpoint, it makes a lot of sense to enter, but I can never ever control the time horizon that it takes for it to bear fruit. You see where I'm coming from? So from there, people who are aware publicly, but they're not aware of how the internal workings of how the group functions, in my case, my private group, how we function, everybody are so seasoned. They already know exactly what needs to be done and when. They react because they know they have to react. They don't contemplate. They know their own risk profile, because I ran through each and everyone's risk profile, because most of the time they are already either my clients or they have been with me for at least 1 to 2 years. So they know that I don't kid around. When I say exit, you know when to exit. Don't tell me that you want to sit in it. If you decide to sit in it, that is your own prerogative. You probably have some strong fundamentals for that particular token. You have a certain feel, a gut feel. Go ahead. Nobody's stopping you. Hence, I never want to manage anybody's portfolio. But I do want to show the results that we have done for the year. At least everybody gets a better understanding why we don't stake, why we don't put our coins on any smart contract, because we clearly know that there may be security code that is unsound, or basically you could potentially get hacked, or you just lose your coins because the smart contract or the network is just not safe. So that has been very, very prevalent. Look at what happened to SushiSwap. Overnight, the tokens just tanked. Why? Because, well, the developer who created SushiSwap decided to just liquidate everything. Now, we also experienced that when Litecoin founder Charlie Lee decided to do the same thing. So you notice that there is a pattern. When there's an opportunity finally to make money, everybody will take it for their own personal gain. So it has been a long time since I said all in, we hodl to the moon or whatever shit. We don't do that. Now, obviously, I'm not going to rant and smash anybody's favorite token. I really do not want to do that. I'm not here to be politically correct either. But I just want to say that right now, our strategy is so flexible, we need to adopt and change as the market sentiment changes. So for a start, I just want to very quickly cover what we've gone through for the past 3 months to 4 months, especially since April, May period, okay? So we did many coins, XTZ. We did Zoom Communications in the equity markets. We did Atom. All right. We did VET. We did Tether. We did a lot of awesome coins. VET, Tether. These were key plays that played out in 2 to 3 months, and we did not take profit until we were very much in the money for a very good reason. So the overall portfolio has a lot of liquidity. We didn't buy and hold anything. We did buy and hold certain key tokens, HBAR. We held a little bit of, we hit HT as per normal, Hopi Pool token. We did, folks who don't have access to BNB tokens or HT tokens obviously went to Ethereum or BTC. So these longer term tokens that are like has been doing very well. And I think those who kind of understood that they wanted to have a heavier weightage in exchange tokens, for example, if you have access to BNB and HT, you're fine. Your whole portfolio is practically is stable. Whereas if you went really heavy on certain tokens early enough, definitely you made money. If you went into Uniswap damn early, you went into Balancer, you went into Compound damn early, you do very well. But did you have the skills to take profit close to the peak? Or at least when it was rising, when you double up, triple up? Did you for once think that I made such solid gains in such a short period of time? Did it ever occur to you to take profit? Rather than how you got that information and you decided that, wow, if I could make 2x, I probably can make 5x. Why? Because everyone was taking Link as an example. Link for the longest time was, I think, around $4, $2 to $4. Okay, that was 2 years ago. Then what happened was Link did something extremely crazy, which is called a parabolic run. or parabolic movement. And that went insane. A lot of people who were holding Link around the $2 to $4 region really decided to cash out around the $7 to $8 region. I am not in Link. I didn't really think about Link because Link wasn't in our watch list. But I'm just giving an example. So Link from then went on to do $20. From there, the Link Marines, the Link Army was saying that we will push to 100. And a lot of people still continue to buy in 15, 16, 17, 18, 19, 20. And I believe that at the end of the day, everybody will go through this learning experience. It's always a cycle, right? It's always a cycle. And I think I am also always continuously learning and evolving. In the past, I would always be a little bit more vigilant to dollar cost averaging and having a lot in a particular bag of tokens. But this year, I decided to be very aggressive with my trades. I was pretty much going in and out of trades very quickly, right? Much faster than my usual patterns. And surprisingly, that paid out very well. I was also in gold back in 2017. I made a video specifically saying that if you were to put 10% of your crypto profits into gold, and at that time gold was 1,001 to about 1,200 US dollars per ounce, and I said, you know what, no harm, right? I've never had that physical asset or even had the funds to even buy that physical asset at the time. Like, I wouldn't even consider it. That was such a long play that only played out this year, and I decided to sell my gold bags at around 1,009 to 2,000. I didn't know whether it will go up to 3,000. I didn't care because I made a 60% return already, which to me is an excellent ROI for the fact that I bought it back in 2017. I was happy, you know, and I was content with that. And I knew that for a fact that would gold go up to 2,005 to 3,000 in this current market with the stimulus packages coming out, with the fact that we are experiencing really one of the worst, depressions or recessionary environments. You're having really the whole hotel industry, F&B all hit, right? We have COVID cases coming in and out, happening all the time, even till now. So to me, the market is still volatile. So I told myself, okay, what's really worth looking at? Is the crypto space worth looking at? And to me, crypto space is where my heart is. I have made the most gains here. I always want to continue to help people make the most gains here because I truly feel that the ROI is really here. But the fundamentals are always lacking. It's not the same. You know what I mean? So right now, to me, I think that if you were someone new and you're watching this video, I think the key thing is don't jump the gun, right? When you read something that's really hot, and to be quite frank, when you're new, everything seems very exciting and very interesting. I've got so many new clients this year that it was very surprising because I don't make any more videos. So it was very strange that new clients were kind of emailing us and looking at private consultation, looking at joining the group. Now I was thinking, okay, how is this happening, right? Because yes, we get very small referrals here and there, and when you're joining the group, is a very small group, it's a very tight knit group, and most of the folks in the group are already 1 to 2 years in terms of maturity and understanding of how it works, right? And I think the key thing that has helped the most is the risk management. It was never about what coin to buy. Like, Ryan, what coin to buy now? It has been many years since I've done that. I don't do that thing anymore. I don't even mention. I just basically help you out in your risk management. From there, we look and step in depth into the market. We look at the market sentiment. From there, we look at, okay, what coins have that momentum for us to even start a trade? From there, fundamentally, what can we be comfortable to hold on to? Right? And even if we hold on to, are we risking our own capital or we're using the profits from the market? Everything is down to the detail. So I think a lot of folks who have watched me through my YouTube already know this, right? But if you're very new to this, you're stepping in, I think right now, from a technical standpoint, everything looks relatively attractive. BTC is magically holding up at $10,700 at the moment, right? Whether will there be a capitulation to the 8,000-9,000 region, that has yet to be known. But for now, altcoins are taking a hit, a massive hit. But I kind of like the fact that our market cap is actually holding above 300 billion. Dominance is around 60%. Okay, let's just assume that the dominance for BTC is around 59 to 60%, which is normal, okay? Because everybody only knows BTC. Everybody is only comfortable to hold BTC. And I would kind of like to see, for the fact that BTC should stabilize close to this region rather than suddenly just for no reason tanking 20%. It kind of doesn't make sense for it to do so because right now there are only so few safe haven assets out there, right? So that being said, we are looking towards building and accumulating still an altcoin portfolio. But I think for the fact that it's below the 100-day moving average to the 200-day moving average from a technical standpoint makes it attractive, but doesn't mean that it's the lowest of the low, because there can be further capitulation due to the fact that still 3 more months till the end of the year. And I think at the end of the day, don't immediately blow all your bullets into one cryptocurrency just because someone says so. Hence, I never do those videos anymore. Hence, I will never give off tips unless I truly know that you already understood the risks involved and where we are at this current point. So for now, I would say that staking is not for us. We will not stake. We will not do any DeFi related liquidity mining or yield farming or whatever, because I feel that we should not take unnecessary risk or even leverage. And leverage is something that right now, at the moment, if you're trying to squeeze out gains, you clearly are forced to kind of go to a high leverage place. Now, take note, not every exchange is offering 5x, 10x, okay, in terms of leverage. In fact, when I noticed those cowboy derivative exchanges allowing 100x, you're clearly subjecting an individual who knows nothing about this market to leverage. It's kind of like pushing drugs to a kid, right? And saying that that is candy when clearly it isn't candy. You know what I'm saying? I think that's just wrong. So what I feel is that they kind of like have to figure it out on their own when they open a trade or when they start a trade and they realize that a 1% is actually 100%. Hence, if they did not know how to adjust the leverage, they are subjected to anywhere from 10x, 25, 50x to 100x. So a 1% is 100% either way, either direction. You could either gain 2x on your initial capital, or you just lose everything because you got a margin call. And to me, that's just unfair, right? So I think that there are exchanges that are taking steps. And recently, I think I'm quite happy to kind of see that. And I'm not shilling anything, but I really want to state that when I wanted to open just to test out, I opened a leverage ETF because I wanted to start a leverage ETF on Link, right? So what I did was I wanted to do the derivative Link -3, meaning that for every 1% that Link drops, I would gain 3%. That's okay because 1:3, okay? And I felt that, there is potential downside. So I looked at it, I was like, okay, I wanted to start it, and I looked for the fact that if I wanted to start that leverage account, okay, or that ETF, I had to go through a series of 5 questions asking me my understanding of how that ETF functions, which was good. That is the first step to helping people, or at least new traders, understand the risk. And if you didn't get the 5 questions correct, you just couldn't get started. And I think that's the right way. You have a barrier of entry. You have to, guys. I know every exchange, especially in the cowboy days, which we're still in the cowboy days, wants to quickly make money. Nobody gives a shit where you're from these days. If you VPN and somehow, your KYC magically goes through and you can deposit your BTC, your US dollar tether, bada bing, bada boom, you're in the casino already. And sadly, a lot of people are going to get smashed. They're going to lose their life savings or whatever. Because the gains were fantastic this year, to be frank. From March onwards, if you had been buying stuff ever since last year, November, December 2019, and you held it out even throughout the March period, and March we had a dip, and you definitely made money all the way until July to August. You definitely made money. But the markets had tapered off ever since September onwards. So my question is, do you even understand the whole space, how risky it is? Although it makes you money, but you also could lose money fast. And that's the truth. And a lot of people kind of don't want to address that. They kind of always just talk about everything shiny under the sun, how fantastic, how forward-looking DeFi is. We need DeFi because, people should not know about how we transact and all that shit. I mean, to be frank, everybody knows that everything is just a digital asset exchange at the moment. Nothing tangible is linked to anything. Smart contracts don't even function properly. So what more? Why are you putting your hard-earned money into such stuff, right? So that's kind of like how I think at the moment. And I kind of want to just kind of put this out there because that's just how I feel, right? It's just very frustrating to see people talk about this whole space, and when they know so little, they think they know a lot. That's the most frustrating thing. And the worst thing is that you have certain key influencers until this very day just pushing stuff out for their own agenda, and really nobody knows. And that's the part where, that's why I feel that I should start making content. But then again, I don't want to deal with that calling people out, and then it gets very tiring and people start commenting because you know, sometimes key influencers have their own army, right? And especially when they kind of came out at the right time and they kind of help people make money during that period, they are like a god, you know. You're like, oh, you're my god. Wow, you helped me make money. But then when everything starts to get smashed, right? You suddenly the whole army just goes quiet. So to me, I realize that every influencer goes through that phase, even myself. And I don't want to go through that anymore. I think I've matured as an individual. So has anyone who has been in the market for long enough, at least more than 3 years. You really understand that you don't want to put out content for your own benefit anymore, because you really can hurt people. And for that, I don't do it anymore. So I kind of just only want to do the overview. Okay, so as I said, I think the strategy is very, very important. Okay, the most important at the moment, I would say, is to focus on the dollar cost averaging strategy, if you even have one, and at the same time, kind of manage your portfolio as if you want to build a position for the next 6 to 12 months, right? I think 6 to 12 months is going to be a fantastic time to kind of just build it out, because our market is always very cyclical, right? And since we are really at one of the most bearish points this year, I think personally we are just going to slowly dollar cost average into our watch list, or what we have in our watch list, and be very specific about it. From there, we are not going to look left or right. We're going to just stay focused. No staking involved, no liquidity mining. We don't care. We just focus on the gains eventually that we plan to achieve in the next 6 to 12 months. We are not going to, we are even happy with 10%, guys, because 10% clearly outperforms any other staking reward. Okay, sure, there are certain staking rewards that are giving a ridiculous amount, but the token prices of those tokens that are giving ridiculous amounts, we're talking about 17% and above. How have their prices held? Let's be very frank. They have dropped a lot. Okay, they have probably dropped anywhere from 30 to 40%, some even 50%, right? So even if they give such a generous amount, but the overall depreciation of the price of the token will not compensate for their fantastic staking reward. And obviously you must be saying, you know what, I'll just hold for a very, very good number of years. That way, eventually when it decides to boom, okay, I will probably avoid or pay lesser because I hit into the long-term capital gains tax range, which is always 12 months, past 12 months. And at the same time, the capital appreciation, bada bing, bada boom, I pay less tax. At the same time, I keep more of my profits. Cool, totally understandable. But my question to you is, do you know exactly which tokens to do that with? Which tokens do you know how to dollar cost average with? I think that's the key question that everybody loves to ask, and hence the whole YouTube content creation came about, right? And I think that will be better served always on a private basis. And I think a lot of people who are qualified to do that should continue to do that, because I think as long as you understand the market from an in-depth standpoint, right? And if you decide to really provide that kind of service, right, I think it's always best to make sure that you already know your stuff, and people already know that you know your stuff. You know what I'm saying? That's very, very important. So from there, you build a portfolio. The only way that I've made all these gains, right, is building a portfolio through the many years, guys. There's no shortcut. Let's just put it this way. There's no shortcut. And we are looking at consistency. We're not looking at that one-off, like as if you struck the lottery or something like that. We're not interested. We're looking at a steady gain of per year, we're looking at anywhere from 30% and above. Easily, that is achievable. Easily. In crypto, it's just a matter of how much is for trading, how much is for which is for the long-term investment portfolio. Everything can be matched. Everything can be managed. And that's kind of like how you should approach this. Other than that, guys, I think the whole DeFi thing kind of is tapering off. Okay, you can clearly see. You can see Uniswap dying, Compound. Are there active users? Sure. Definitely there will be people using. But I think the whole situation where BitMEX, right, is being charged at the moment, and I mean, to be frank, I don't think it's that big of a deal. At the end of the day, maybe pay off a fine, whatnot. That's it. It may not be as straightforward, but I think it's always about money at the end of the day, right? Like, yeah, sure. Could he end up in prison? Maybe. But at the end of the day, if everything can be settled with money, which Arthur Hayes has a lot of, why not just settle it with money? I think it's just the way the world works, right, guys? So right now, a lot of and also CFTC has also mentioned that with DEXes, it could potentially just go after the developers, right? So that kind of caused quite a bit of a stir, right? The developers are now the ones that could potentially be charged because because at the end of the day, operationally, the DEX, although is privately run, but where's the KYC, right? Where is the KYC? Where's the know your customer? There's none. So a lot of so-called illegal or illicit transactions could be taking place, and you will just say, well, I created this platform, right? And then you just say, I don't have any bad intentions. I'm just making this platform for the greater good of everyone. But I guess maybe CFTC doesn't buy that, and if you are a US citizen, a US developer who created it, then you are obviously subjected to the laws of the US jurisdiction, right? So that's kind of like probably spook the market a little bit, spook liquidity providers, spook market makers, and hence maybe you see this dry up of sudden volume. That could be the reason as well. Who knows? But hey, you know what? At the end of the day, this is all just content. I'm not a licensed financial advisor, and everything that I make is probably just for fun. Anyway, guys, enjoy the video. I hope you enjoyed the video. Click like, subscribe to the channel if you like, and of course, if you feel that you really want to learn about the space, you can email me at ryan@cryptogrinders.com. See you in the next live stream. See you guys.